Hi students, today we will take an example of a stock in the capital goods space and show you how we analyze the stock from an education perspective. We will cover several parameters such as business model, management pedigree, competition, growth drivers, financial strength, and risks and concerns. Let us first give you a summary of these factors. Kirloskar Brothers is the largest pump player in the domestic pump industry, sitting on the verge of a transformation phase. The transformation has occurred owing to demand from key industries, a turnaround of the overseas business, and an expansion of its services portfolio. The company has a standalone order book including exports of rupees 1,922 crores and an overseas order book of rupees 840 crores. Domestically, a favorable demand environment from irrigation, water management, power, building and construction, industrials and oil and gas bodes well for its future growth. Despite facing a lull phase in the last few years, the company has a low debt to equity of 0.3 times, a cash balance of rupees 146 crore as of December 2022 and a short working capital cycle of close to 70 days. As per consensus analyst estimates, its estimated revenue and profit would register a CAGR of 11% and 27% from FY23 to FY25, driven by declining commodity prices, improvement in global supply chain, sustained earnings recovery in the international business, and increasing the share of services. Its operating margins would improve from 6.7% in FY22 to 9.9% in FY25, and profit after tax would increase at a robust double digit by more than 25% over FY24 to FY25. Current valuation discounts the stock at 13.2 times its FY24 estimated earnings of rupees 28.2. Now let us understand the company in a bit detail. Kirloskar Brothers Limited is a flagship company of Kirloskar Group. It is engaged in the design, engineering, manufacturing and servicing of large and medium pumping solutions for the complex fluid management system. The company also offers small pumps for day-to-day use at households and farms. KBL, which is Kirloskar Brothers, offers 75 types of pumps and 28 types of valves and manufactures pumps up to 22 megawatt. The company enjoys a 15% market share in small electric pumps as of March 2022. It is also into manufacturing of low tension induction motors with pico and mini hydel turbines. KBL has manufacturing setups in Pune, Coimbatore, Shirwal, Sanand and Devas. Internationally, its plants are in the US, UK, UAE and South Africa. India contributes 64.8% to its revenue and the remaining is contributed by the overseas business. KBL has 3 domestic subsidiaries and 1 domestic joint venture, and its international operations come under the subsidiary Kirloskar Brothers International BV, which has 6 international subsidiaries under it. The company provides innovative solutions such as solar pumping systems, pump selection package, fire pump monitoring, lowest life cycle cost pump series, primary heat pumps for nuclear power plants, remote monitoring system which is Kirlo Smart, augmented reality mobile training guide, caned motor pump and digital sizing guide. KBL also has associations with the government of Angola, Cambodia, Egypt, Ghana, Jamaica, Laos, Lesotho, Senegal, Sri Lanka, Sudan, Vietnam and Zimbabwe. It has partnerships with companies like Tata Power, Reliance Industries, ArcelorMittal, GST Transformations, Bechtel, Sumitomo, Lind, Siemens, Hyundai, Toshiba and many more. The list of its global clientele includes companies such as British Petroleum, Total, Shell, United Utilities, LH, CNR International, State Oil, ExxonMobil, ConocoPhillips, Thames Water, Southwest Water and many more. The company is headed by Mr. Sanjay Kirloskar, who is Chairman and Managing Director, and he holds a bachelor's degree in mechanical engineering from the Illinois Institute of Technology in Chicago, USA. He also presides over the board of a couple of other listed companies. The promoters have their skin in the game as they own 65.95% of the company and haven't diluted any stake to date. The pedigree of the management is also evident from the fact that over the years they have divested unrelated businesses and acquired related businesses to focus on the pumps business and turned around and made them profitable. KBL is currently at an inflection point with several growth drivers in place. Let's first talk about the domestic business growth drivers. As per Indian Pump Manufacturing Association, the pump industry has to reach $1.8 billion by 2022 and is expected to grow at a CAGR of 5.59% from 2023 to 2027, primarily driven by agriculture and building services, which would get a boost from increasing focus on the development of wastewater treatment plants and desalination plants in the country. Various government initiatives for strengthening and developing existing and new infrastructure projects, Jal Jeevan Mission, Krishi Udan Yojana, and the PM Kusum scheme would add to the growth of the pump industry. The company has increased its share of made-to-order products in its portfolio over the years as it provides consistent revenue and faster cash generation. The company's consolidated order book, including export, stands at 2,845 crores as of Q3 FY23. Further, an increase in the number of dealers, distributors in the made-to-stock category would help the company to expand its market. Overseas business drivers include the following. As of 9 months of FY23, its overseas business turned EBITDA positive at Rs 47 crore compared to a break-even in 9 months of FY22. At the end of 9 month FY23, the order book of international business jumped from Great Britain pound 52 million to Great Britain pound 84 million. The company has focused on increasing its share of the other industries like water, fire, and industrial to reduce its dependency on the oil and gas sector, which is more consistent and less working capital intensive compared to the large oil and gas projects. The company plans to scale up its spares, services, subscription platform, and maintenance business, which would help to counter the cyclicality and create a recurring revenue stream and upfront payments. Let's talk about the competition. The pump industry is a highly competitive and fragmented industry with many small and medium enterprises. However, the industrial sector is dominated mainly by large corporates as it is technologically intensive and relatively harder for the SMEs to penetrate. The domestic pump industry is highly fragmented and there are 4 to 5 key domestic players in the organized pumps market, such as Kirloskar Brothers, KSB Limited, Shakti Pumps, and Crompton Greaves Consumer Electricals. Additionally, there are foreign players such as Grundfos India, Flowserve, ITT Gulds Pumps, and Sulzer competing with local players. KBL is the only player in the retail segment of made-to-order with the most energy-efficient pumps having IE4 and IE5 motors, priced at significant premium to standard pumps. It gives the company an early advantage in growing the green energy market. Some of the key risks of investing in the company include fluctuations in raw material prices, which could impact adversely its margins. The company has considerable exposure to international markets owing to its exports and international subsidiaries. Hence, foreign exchange fluctuations could impact its overall profitability. High competition in the pump industry is also a key risk. For a long period, the company has faced inconsistent and subdued growth. However, as per consensus analyst estimates, company's revenue and profit are estimated to grow at a CAGR of 11% and 27% from FY23 to FY25. Its operating margins would improve from 6.7% in FY22 to 9.9% in FY25, and profit after tax would increase at a robust double digit by more than 25% over FY24 to FY25. Despite the slowdown, the company has a low debt to equity of 0.3 times, a cash balance of Rs 146 crore as of December 2022, and a short working capital cycle of close to 70 days only. KBL generates free cash flow to the tune of Rs 78.5 crores, which helps it to keep its borrowings low. To break out of the lull phase, KBL has taken several measures such as diversifying its product portfolio, seeking opportunities in international markets, and promoting its spares, services and subscription platform and maintenance business, which would help counter the cyclicality and create a recurring revenue stream and upfront cash payments. Additionally, macroeconomic factors such as domestic and overseas business would support it in the future. The growth in its revenue and improvement in the margin will be supported by stable commodity prices, improving supply chain, and increasing the share of services business. At the current market price of Rs 373, the company is valued at 13.2 times its FY24 estimated earnings of Rs 28.2 and trades at fair valuation on the valuation band. Technically, the company looks promising at Rs 340 levels. All this analysis makes KBL a fundamentally sound company. Kindly note, we do not give any recommendations or advice. Students who wish to learn further can do their own analysis or consult a financial advisor. This is Viral Shah signing off. Happy investing. This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing. Thank you.